All right, welcome back everyone for another deep dive. Today, we're cracking open Geely's 2023 annual report. And look, whether you're an investor or maybe you're just fascinated by the car industry, this is going to be a wild ride.
I think it's a really interesting case study, seeing how they're managing to have a really strong traditional car business while also pushing really aggressively into electric and intelligent vehicles.
Absolutely. It's like they're straddling two worlds. So let's get into it, starting with Geely's business segments. And the big story here is, you can't deny it, it's growth. They blew past their sales target, hitting 1.65 million vehicles. That's a new record for them.
Yeah, and they've done it by building a really diverse brand portfolio. You've got the classic Geely brand, the one that everybody knows. Then there's Lincoln Co., which is going after a younger, kind of trendier crowd. And of course, there's EKR, which is their luxury EV play. That's a smart strategy, right? Each brand caters to a different type of customer, so they're not really competing with themselves.
It's like they've got all their bases covered. And speaking of covering bases, let's talk about their China Star series. Over 870,000 people bought those cars in 2023. And these are premium internal combustion engine vehicles. So, there's still a huge market for high-quality, gasoline-powered cars, especially in that premium segment.
Absolutely. But at the same time, they're not ignoring the EV revolution. Look at ZR. They grew by 65% year over year.
That's crazy growth. Over 118,000 ZDR vehicles on the road. It shows they're serious about EVs. They're not just dipping their toes in the water, they're diving in head first.
They're definitely leading the charge, at least in China. But they're also making moves globally. Europe, Southeast Asia, they're expanding their footprint. That partnership with Proton in Malaysia is a good example.
Yeah, it's a smart way to tap into those markets. But going global, it's not a walk in the park, right? There are challenges, especially in the auto industry.
Oh, absolutely. You've got the whole global economic situation, which is a bit volatile, to say the least. Supply chains are still a mess. And the competition, it's fierce. Remember those price wars we saw last year?
Yeah, it was brutal out there. But somehow, Geely still managed to pull off some pretty impressive financial results. Despite all those headwinds, they grew revenue by 21%, hitting a whopping 179.2 billion RMB. And their net profit, up 6% year over year to 4.94 billion RMB.
It's a sign that they're managing costs effectively, and if you look at their income statement, you'll see that their gross profit margin actually improved. That's a positive sign in such a tough environment.
So they're making more money on each car they sell, even with all the pricing pressure. Okay, let's dig into those financials a bit more. We're talking income statement, balance sheet, cash flow statement. What can these numbers tell us about the drivers behind Geely's success?
Sure, I think that improvement in their gross profit margin, especially with all those price wars going on, really suggests they've got pricing power. People want their cars, and they're willing to pay for them. And their balance sheet looks pretty solid, too. They've got a ton of cash, 37.96 billion RMB, and they've actually reduced their borrowings to 6.1 billion RMB.
So they're sitting on a nice pile of cash, and they're not over-leveraged. That's got to be good for investors. What about their cash flow statement? What's that telling us?
Well, they're generating a lot of cash from their operations. A lot. We're talking 22.3 billion RMB. So they're converting those sales into actual cash, which is what you want to see. They can use that cash for all sorts of things, investing in new projects, paying dividends, buying back shares, or just paying down debt. It gives them flexibility, and it also provides a bit of a cushion if the market takes a turn for the worse.
That's a crucial point, that flexibility. All right, let's finish this financial deep dive with free cash flow. That's basically the money they have left over after they've covered their essential investments, right?
Exactly. It's the cash they can use for things like dividends, debt repayment, or those strategic investments we were talking about earlier. Now, the annual report doesn't give us a specific free cash flow figure, unfortunately.
That's a bummer. But, I mean, given their strong operating cash flow and the fact that they're paying down debt, it's reasonable to assume that they are generating positive free cash flow.
Yeah, I think that's a safe assumption. Investors would definitely want to dig into that further. But overall, it seems like they've got the financial resources to pursue their ambitious plans.
Okay, so financially they seem to be in good shape. But what about creating value for shareholders? What are Geely's plans there? They've got a few options, right?
Oh, definitely. They've announced a dividend increase, so that's good news for shareholders. They're bumping it up from HKC dollars 21 cents to HK dollars 22 cents per share. It's not a huge increase, but hey, it's a step in the right direction.
It's a sign that they're committed to rewarding shareholders. And let's not forget about their share buyback program. They got the green light for that at their last AGM, so they can buy back their own shares, which can boost the value of the remaining shares.
Right. And then there are the investments they're making, all that money they're pouring into R&D, especially in things like electrification and intelligentization. That's a big part of their Smart Geely 2025 strategy, which is all about future growth.
So they're investing in cutting-edge technology, trying to stay ahead of the curve. That's got to be appealing to investors who are looking for long-term growth.
Absolutely. But let's be real, the auto industry is a tough business. It's incredibly dynamic, and the global landscape is, well, unpredictable, to say the least.
Yeah, things can change quickly. You've got inflation, rising interest rates, geopolitical tensions. Those things can really throw a wrench in the works.
No doubt about it. But even with all that uncertainty, Geely seems to be in a pretty strong position. Their brand portfolio is diverse, their sales are impressive, and their financials are solid.
Okay, so we've covered a lot of ground here. We've looked at their business segments, their financial performance, and their plans for rewarding shareholders. But before we move on and start digging deeper into those individual brands, what really stands out to you from this initial look?
Honestly, I think it's that balancing act they're pulling off. They're succeeding with traditional internal combustion engine vehicles while also going all in on electric and intelligent vehicle technology. They're not just reacting to the changes in the industry, they're actively shaping them.
I totally agree. It's a testament to their adaptability and their vision. They're not putting all their eggs in one basket. They're creating multiple paths to success.
Okay, well, let's shift gears now and take a closer look at the individual brands that are driving Geely's remarkable growth.
Sounds good to me. I'm especially curious to see how they're managing that transition from ICE vehicles to electric and intelligent vehicles across those different brands.
Yeah, let's hit the road and find out, starting with their flagship brand, Geely. What can we learn from their performance in 2023? Well, we know the China Star series, which is under the Geely brand, was a huge success, attracting over 870,000 customers. It really tells you that even with all the buzz around EVs, there's still a strong market for those, well-made, feature-packed, gas-powered cars, especially in that premium segment. Geely's really nailed it there.
Yeah, it's like they're giving people what they want right now while also prepping for the future. Okay, so let's move on to Lynk & Co., their brand that's, a bit more youthful, a bit more global. What's their strategy?
Lynk & Co., they're all about capturing that younger, tech-savvy market. Stylish designs, connected car features, and they're playing around with some pretty innovative ownership models, too, like subscriptions and shared mobility. They're really trying to redefine what a car brand can be.
It's a fascinating approach. It's not just about the car, it's about the whole experience, the lifestyle. And it seems to be working, especially in places like Europe, where people are more open to those kinds of new ideas.
Yeah, they're tapping into this growing group of consumers who are all about flexibility and connectivity and sustainability, too. It's a smart move, especially as those trends become more and more important.
Okay, let's shift gears again and talk about Zeekr, Geely's big bet on electric vehicles. They had a huge year in 2023, but is that just because EVs are hot right now, or is there more to it?
Oh, there's definitely more to it. They've been really strategic about expanding their product line. They've got models like the Zeekr X, the Zeekr 001 FR, and the ZOA 007. Each one is going after a different slice of the EV market, different features, different price points.
So they're not just making one kind of EV and hoping it appeals to everyone. They're recognizing that the EV market is becoming more diverse with all sorts of different needs and wants.
Exactly. And they're not just focused on the car itself. They're also making some serious progress on the technology side. Their self-driving system, the Hauhan intelligent driving system, it's being rolled out in their new models, and it's got some really impressive capabilities.
Yeah, that technology is becoming a huge selling point. People want those smart features, and Geely is clearly investing a lot to make sure they're competitive. But they're not just building EVs, they're building a whole ecosystem around them.
Right. They're creating this whole user service ecosystem. It's about more than just the car. It's about charging infrastructure, connectivity services, personalized digital experiences. They're trying to make the whole EV experience seamless and enjoyable.
It's a really holistic approach, and I think it could give them a real edge in the market. Okay, so we've talked about China, Europe, and now we need to mention their partnership with Proton in Malaysia. That's a big part of their push into Southeast Asia, right?
Absolutely. That partnership is key for them. It gives them access to Proton's manufacturing facilities and their distribution networks in the region. It's a much faster and more efficient way to scale up their operations. And they're also using this partnership to introduce new models under the Proton brand, including EVs, so they can reach even more customers.
It's a win-win. They get to leverage Proton's expertise and infrastructure, and Proton gets to benefit from Geely's technology and global reach. But let's be honest, going global always comes with challenges. What are some of the hurdles they might face?
Well, there's the global economic outlook. That's a big one. I mean, who knows what's going to happen with inflation, interest rates, and all that. The auto industry is really sensitive to those macroeconomic trends.
Yeah, those are external factors that are really hard to predict or control. What about internal challenges? Are there any hurdles they need to clear as they expand?
One of the biggest ones is managing that transition from internal combustion engine vehicles to EVs. I mean, they can't just abandon their existing business, right? They need to keep investing in EV research and development, building new factories, setting up charging infrastructure, but they also need to make sure their traditional car business stays profitable.
Yeah, it's like they're walking a tightrope. They need to balance those two sides of the business.
Exactly. It's all about making smart decisions about where to allocate their resources. And then there's the technology race. I mean, the EV market is super competitive. There are new players popping up all the time. They can't afford to fall behind. They need to keep innovating.
It's a constant battle to stay ahead of the curve. But despite those challenges, it seems like Geely is in a pretty strong position overall, wouldn't you say?
I think so. Their brands are diverse, their financials are solid, and they're committed to innovation. They seem to have a good handle on things.
Okay, so we've covered a lot of ground here. Business segments, financials, strategic investments. But we haven't really talked about how Geely is creating shareholder value beyond just dividends and share buybacks. They've got some interesting initiatives in that area, right? Maybe we should
Right.
shift our focus there and see how those might impact investors in the long run.
Yeah, that's a good point. Dividends and buybacks are important, but a company's real value is often tied to its ability to innovate and adapt. And Geely seems to get that.
We've talked a bit about their investments in electrification and intelligentization, but what do those terms really mean in practice?
Well, electrification is pretty straightforward. It's all about developing and expanding their EV offerings. Hybrids, plug-in hybrids, fully electric vehicles. We've seen that with the growth of Zeekr and the new EV models they're launching across their brands.
So they're putting their money where their mouth is. It's not just talk, they're actually doing it. But intelligentization, that's a bit more futuristic. What does that involve?
Intelligentization is all about making their cars smarter. Think advanced driver assistance systems, connected car features, autonomous driving capabilities, things like self-parking, lane keeping assist, and eventually, maybe even cars that can drive themselves in certain situations.
So basically, they're turning their cars into computers on wheels.
Pretty much. And those technologies are becoming more and more advanced and integrated into the driving experience. People want them, and Geely is making sure they deliver.
Okay, so they're investing in all this cool tech. But how does that translate into value for shareholders? Is it just about selling more cars, or is there something more to it?
It's definitely about more than just selling cars today. It's about securing a dominant position in the market of tomorrow. By developing cutting-edge technologies and creating new models that people want, they're aiming to boost sales, increase market share, and ultimately grow their revenue and profits over the long term.
So it's a long-term play, but potentially a very lucrative one for investors who are willing to be patient.
Exactly. And by establishing themselves as a leader in EVs and intelligent vehicles, they're attracting investors who are looking to get in on the future of mobility. That can drive up their stock price and create even more value for shareholders.
It's a smart strategy. But let's be real, no investment is without risk. What are some of the potential pitfalls that investors should be aware of?
You're absolutely right. Every company has its risks. One of the biggest ones for Geely and for the auto industry in general is that it's a cyclical business. When the economy slows down, people tend to buy fewer cars, and that can hurt sales and profits.
That's a risk for all car companies, but it's especially relevant for Geely, considering how much they rely on the Chinese market, which is facing some economic headwinds right now. Are there any other Geely-specific risks that investors should keep in mind?
Definitely. The competition in the EV space is fierce. There are so many new players entering the market, both established automakers and startups. Geely needs to stay on top of its game and keep innovating to stand out from the crowd.
It's a constant race to stay relevant.
Exactly. And there's always a chance that their bets on certain technologies, like autonomous driving, won't pay off as quickly or as much as they hope.
So there's an element of uncertainty. It's a calculated risk. What else could potentially derail Geely's plans?
Well, there are geopolitical risks. As they expand globally, they're exposed to political and regulatory changes in different countries, especially in regions like Europe and Southeast Asia.
Navigating those complexities can be tricky, and it could definitely affect their profitability in those markets.
And what about those supply chain disruptions? Are those still a major concern?
Oh, absolutely. The chip shortage has been a nightmare for the entire industry, and it's not clear when it's going to end. These disruptions can lead to delays in production, higher costs, and frustrated customers.
Yeah, those supply chain issues are like a wild card. You never know when they're going to pop up and throw everything off track.
And then there are always those unforeseen events that nobody can predict, like natural disasters or pandemics. Those things can happen out of the blue and have a huge impact on any business, especially a global one like Geely.
It's a reminder that even the best plans can be derailed by things outside of their control. Exactly. So while Geely has a lot going for it, investors should definitely be aware of these potential risks and factor them into their decision making. It's all about weighing the potential rewards against the inherent uncertainties.
Okay, so we've taken a deep dive into Geely's business segments, their financials, their strategic investments, and even some of the risks they face. Now it's time to zoom out a little bit and look at the bigger picture.
Yeah, let's step back and assess their overall prospects, considering everything we've learned and thinking about the future of the auto industry. This is where things get really interesting.
Given everything we've discussed, how do you see Geely positioned in this rapidly changing landscape? Do they have what it takes to not just survive, but actually thrive in the long run?
Well, I'd say they're in a very strong position. They've got this diverse brand portfolio that caters to all sorts of different tastes, from traditional gas-powered cars to the latest EVs. They're not putting all their eggs in one basket, which is smart in such a dynamic industry.
Yeah, they're hedging their bets, covering all the bases, appealing to today's buyers while also getting ready for the future.
Exactly. And their financial performance last year shows they're resilient. They can handle tough market conditions, they've got a healthy balance sheet, strong cash flow, and they're being smart with their money.
They got a solid foundation to build on, but I think what really sets them apart is their vision for the future of mobility. They're not just following trends, they're setting them.
I agree. They're investing in research and development, forming strategic partnerships. It shows they're serious about innovation, they're playing the long game, anticipating what's coming next, and making sure they're ready for it.
But of course, no company is perfect. We've talked about the ups and downs of the auto industry, the intense competition, and the potential for unexpected challenges, both geopolitical and technological.
Right, and those are all things that investors need to consider. But Geely's management team has proven they're adaptable. They're not afraid of change. They've embraced new technologies, made smart alliances, and made tough decisions when they needed to.
So you're cautiously optimistic about their future.
I'd say so, yeah. They've got the right mix of ingredients: strong brands, solid financials, a commitment to innovation, and a clear vision for the future. But it's not going to be easy. They need to execute their plans well, navigate those inevitable challenges, and adapt to whatever the auto industry throws at them.
It's a tough road ahead, but it sounds like you think they're up for the challenge.
I do. But before we wrap up this deep dive, maybe we should take a moment to think about the bigger picture. What does Geely's success mean for the Chinese auto industry as a whole?
That's an excellent point. Geely's story isn't just about one company. It's a reflection of what's happening in the entire Chinese auto industry. It shows how competitive and technologically advanced Chinese automakers have become.
Right, they're not just catching up anymore. They're leading the way, especially in EVs and intelligent vehicles.
And Geely's success is inspiring other Chinese automakers to step up their game. It's creating this positive feedback loop that's pushing the whole industry forward.
It's like a rising tide that lifts all boats.
Exactly. And I think it has big implications for the global auto landscape. As Chinese automakers become more competitive and technologically sophisticated, they're starting to challenge the traditional dominance of European, Japanese, and American car companies.
We're already seeing that power shift happening, and it's only going to accelerate in the coming years.
And Geely is right at the forefront of this transformation, leading the way for a new generation of Chinese automakers who are ready to compete on a global scale.
It's a fascinating story, and I can't wait to see what happens next.
Me too.
Oh.
Okay, so we've covered a lot of ground today. We've looked at Geely's business segments, their financials, their strategic investments, and even their impact on the global auto industry.
We've given our listeners a pretty comprehensive overview of where they stand today and where they're headed in the future. But as always, there's more to uncover, more to analyze, and more to think about.
Exactly. So as we wrap up this deep dive, let's leave our listeners with a final question to ponder. What does the future hold for Geely as the auto industry goes through this massive transformation?
Will they be able to keep up this momentum? Can they navigate the challenges ahead and emerge as a true leader in the new world of mobility?
It's a tough question, but it's one that's worth thinking about as we witness this incredible evolution of the auto industry. Thanks for joining us on this deep dive. We'll be back next time with another fascinating exploration of a topic that's shaping our world.